Now, manufacturing data out this week showed weakness in the month of May. This is the second straight month of slowing manufacturing growth. To break down what a CEO and executive in the space is seeing in the automation and electrification manufacturing space, we've got Peter Voser. He is ABB's current chairman, and he is the former Shell CEO, joining us here in studio. Peter, thank you so much for being here. We really appreciate it.
Thanks for having me.
So I want to start on this data that we're seeing about some potential softness in the manufacturing space. To what extent are you seeing that in your role at ABB? What is that looking like?
Actually, for ABB, which is concentrating on electrification and automation, we haven't seen that slowdown. We have actually seen a pick up in the short cycle orders, which normally is a good sign that the economy is actually doing much better than anticipated, because that has been coming down for a few quarters. So far, I think we are still in the camp of it's better than expected, but the second half will have some uncertainty.
That's interesting, given that the data has sort of looked worse in terms of that in the first half, so we'll have to see in the second half. But I want to get to what you're seeing in the EV space while we have you. I know the majority of your revenue comes from building new energy systems, and you've said that the whole electrification network when it comes to EVs really needs to be up to speed. Where do you anticipate that up to speedness coming from? Do you anticipate the private sector coming in on infrastructure? Do you think it'll be company driven at the public sector?
I think it has to be predominantly private, and it has to start with the utilities actually providing us with the electricity, i.e. that means the networks needs to be further developed, the infrastructure, and some of the acts there in the US do help if I stay with the US, but then also on the charging infrastructure, in my opinion, that has to be a privately led kind of drive. We are a global leader on the charger itself, but we are not building the infrastructure for that. But this needs obviously more private money. It needs more investments because I think the electric vehicle side, the demand is there. We see a little bit of a slowdown at the moment because subsidies are going out of the market. But I think the long-term change into the new energy system, which is electrification, is going to happen. Therefore, we need urgently infrastructure investments, and that should come from utilities and other new players going into that area.
Well, when you hear about a Mercedes, a Stellantis pulling back on EV battery factories because of poor demand, what read-through does that have to your business?
Obviously, that could mean less charging for us. But given that we have a backlog, I wouldn't see this as actually impacting us a lot, because I think the infrastructure normally should be ahead of the usage of the technology, so the cars itself. Now, over the last few years, this has been the other way around. Right. You saw a lot of EV cars coming in, and then the Electrify Americas came in Europe. It's the IONITY. It's really the governments and the private sector now building the infrastructure. And I think, therefore, this will happen. I think we are selling a lot of chargers at this stage in the industry, but there has been a slowdown, there is no doubt about that. But the long-term perspectives are exactly the same, in my opinion, very positive.
I want to talk to you about China. We've seen executives like Elon Musk going to China, now saying that he favors no tariffs on Chinese EVs. Regarding the kind of tariff tit for tat that we might see bubbling up and kind of the tension worsening over that between the US and China, what impact does that have for you, and where would you say you lie on the tariffs conversation?
I think there are two answers to this one. One is in China. Now, I have to tell you that ABB never had global supply chains. So we sell in a country what we produce in a country. That's the same in the United States or in NAFTA. But in China, it's around 85%. In Europe, it's around 95%. We produce and sell there. Therefore, the tariffs for us are a little bit less relevant. Sure. Now, coming to the US, we had this situation also between 2016 and 20, for example, where tariffs on steels actually were going up. And as long as we can demonstrate that this steel cannot be produced, for example, in the United States, we normally got a favorable response out of Washington that these tariffs were not hiked that much, because at the end it would be the consumer in the US paying it. So I think let's see how this will develop. But tariffs on the imports of other countries for products you cannot produce in the country, I think there we need to find a different solution than just actually putting tariffs up, because at the end it will be the US consumer paying the bill for that.
As an executive that works really globally, though, I am curious what it's like for you to kind of walk the tightrope between the US and China. How do you navigate those conversations when we do have this tense backdrop?
Yeah, I think as a company, you have the obligation to look at these risks. And therefore, we have a plan A, B, and C in China. Should anything happen in Taiwan, should anything happen more on the tech war, we do use different technologies in China for our local business. So we are not using, let's say, Western technology. So you have to adapt your system in order to actually be able to produce still and sell. We look at this from a macro perspective and then bring it down to micro, where we then really manage the countries. And yes, it's a concern on the one side, but on the other side, we are paid to also deal with obstacles in the road, and that's what we are doing in terms of planning, risk management, etc.
I love that take. It's hard, but that's what we're paid for, right?
Yes.
I want to get your take on one last thing here. You're on the board at IBM, a company that's really successfully navigated the transition to the AI boom, creating a fund for AI startups, for example. What was it like in the room in terms of meeting with the board? What single decision were you a part of that kind of laid the path for that AI transition and adoption at IBM to go so well?
I'm not the official spokesperson, but I give you an answer. I think over the last few years, under the management and the leadership of Arvind, obviously IBM was positioned in a very different way, starting with the major acquisition of Red Hat, which was a cornerstone in the strategy which we are using, the spin-off also of Kyndryl. And with that, actually, in the discussions in the board focused on new technologies. And AI dominated the last few months. I think in 2-3 years' time, you will see that quantum will dominate the boardroom as well. And I think IBM is a B2B business. It's not a B2C business. And therefore, I think the tremendous opportunity which lies in the industries by using AI, I think IBM is well positioned to actually go in and get their fair market share of this one. And I think that's not yet reflected in all the write-ups I see on IBM, because the B2B business comes after the B2C business.
You're already having discussions about quantum?
Of course we have, because that's a long-term strategic emphasis of IBM, and I think it's one we all look forward to.
All right, Peter. Well, we're going to have you joining us to discuss the future of quantum after this AI boom starts to wrap up. Thank you for joining us. Thank you for coming in studio. We really appreciate it.
Thanks for having me.
That was Peter Voser. He is ABB's chairman and the former CEO of Shell as well.